You can start now,
Okay.
please.
Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So all are anxious to know what is going to be the outcome of Britain exit, whether it is going to remain with the EU or not. So people are really confused about the conditions, and now you find that people are talking about rain in London and things like that. So that could bring in the change in the voting pattern, etc. So basically, more and more uncertainty is being created. What is going to be the situation, economic conditions in Europe and UK? Everything is going to depend upon this particular voting. So obviously, the referendum is expected to have a limelight. So that is why everybody is anxious to know about it. But we have to find out whether the referendum is positive or negative, how the market is going to move. That is most important for us. So normal feel among that of the trader is, if the referendum is positive, that is UK is to remain with that of Euro, then GBP has to go up. And if that exit is going to be envisaged, then GBP has to come down. This is what the normal expectation is. And you know very well, the players are the one who make the moves in the market. And there are many occasions wherein you have seen that besides these expectations, they also give certain other interpretations, namely risk aversion and risk appetite. So when they make a move against the expectations of the traders, they can simply say that it is risk appetite, or they can say it is risk aversion. That is why, even though it is positive, they can still make a drop. So ultimately, when you try to derive the expected market moves based on the outcome of the poll, then probably we will be like cat on the wall. So expecting either way moves. But actually, we need to find out what the players intend to do, because they are the market movers and they have made huge investments in the market, and they cannot allow the market to just go to zero or infinity. By that, they don't make any money, and they don't have any affinity to any currency pair for that matter. All they are interested is to make money for their huge investments, which we cannot even imagine. In such a situation, today we are on 23rd of June, Thursday, between 8 and 8:40 GMT, I am going to give the trade calls. How exactly we can take positions today and what is envisaged tomorrow, I will explain to you after that of the release of the outcome or the results. So tomorrow, same time, I'll come back and just review the market and also find out what happened to the calls, so that you will be able to really understand that reading the intentions of the player is much more vital or much more promising for our trading decisions, rather than simply following the fundamentals or the technicals, because the players can simply give an alternative interpretations. When you follow strictly the fundamentals, they can say technically the market has reversed, or when you follow technicals, then they can say fundamentally the market has taken the move much against the expectations of the technicals. So simply they can give an interpretation. Ultimately, why it happens every time in the market in a similar way, it is very simple, because the players want the traders to commit positions. If the traders need to commit positions, they have to get convinced. Only then they will take a position. Otherwise, if they are in uncertain condition, the traders will hesitate taking any position. So either they have to follow the technicals or the fundamentals and then try to take an appropriate decision following various studies and take the position. And then if the players make the market to move in the opposite of the predominant of the traders' pending positions, then all such traders will lose money, the players will earn. So the players have got every time a single objective that create the market sentiment and act against that of the traders' pending position, so that they are in a position to earn consistently money from the other market. So we try to interpret or we try to predict what could be the possible moves out of this British exit concept. Now we will go into that of the today's forecast. Now my trading system goes like this. I follow my forecast, which gives the broader outline, and also it gives a long-term forecast. I split the forecast into every 30 minutes market move and try to give an interpretation with regard to the various sessions, and those session timings are followed by that of the players. So how exactly they're expected to make the moves in those specific time frames. So you follow the time frame rather than the names, because those time frames, the early and the late sessions, how they are expected to make the move in the market are being given here. Now, in that process, UK EU referendum falls in. The start is from now. So obviously, we have to find out in the European session by 8 GMT, the market is expected to make the swing and rise. Then afterwards, people think that, okay, the Euro referendum could be positive to that of the UK remaining with EU with regard to economic collaborations. So obviously the people will try to go in for buy and sell trade, thinking that outcome is going to be positive, or exit poll says that it is positive, etc. But the players are expected to make the slide during that of the US session, telling some other story and discourage those who are holding long positions to liquidate their long positions. Then afterwards, you find tomorrow, Euro and GBP are expected to make a false dip by early Japanese session and start rising it after that, spike up. So tomorrow you are expecting, I am expecting a spike up based on that of the type of market moves they are expected to make for the weekend. So this is how I take into consideration the broad forecast. Then I fine tune the forecast, whether it is going to happen really or not. I use the market reading technique. How exactly the market reading is being done? I make a note of the initial lows and the highs using the live market quote page by 3:30 GMT. Today I have made a note of it in the case of all the four majors and two commodity pairs. Today is Thursday, so Monday I have given the webinar explaining how exactly the market was expected to behave, which has moved in tandem with that. And now we are on Thursday. So the initial low in the case of Euro was 1.1296. The high was 1.1348. They just breached the high and come down. By 2 pips, they breached the high and come down, indicating that they are likely to make a downward stop and before making a rise. Okay, an upward stop and followed by a downward stop and then they will hold near the low during the US session. Then in the case of GBP, 1.4707 is the low, 1.4845 is the high. Once they set the high before that of 3:30 GMT, they are not breached the high. And they came down several times to 1.4737 and then went up to 1.4790 and come down, go up, come down. This is how they are making the moves in the case of GBP without breaching the low or the high. So they are only inducing the traders to assume GBP could go down or it can go up. So they are in the wide range consolidation in this 100 pips range. I given an analysis in the blog that GBP is expected to make a wide range swing from that of 1.4850 to 1.47 area, and this particular swing will only help those who have taken the long positions since yesterday to book profit. But anybody who has taken a sell position will be really facing problem. They could go in for a short covering once they go closer to the high. And many of the traders might think that we can go in for a breakout trade and try to buy a position around that of the strong resistance 1.48 psychological level and 1.4823. Then they will probably try to take a buy around 1.4535, and then the traders might also find a problem there because they are not able to see the profit because the players have come down below that of 1.48. So anyone who is trying to do it technically a trade, that is buy after that of the rise thinking that it will make further rise, or sell after the drop thinking that it will make more drop, they are put into drop problem. A person who is using the common sense to buy when there is a drop and the low is not being breached for about 30 minutes to 2 hours, take a buy, then which is showing profit. And if you see overall last month and this month, the players are just slowly consolidating and gaining the levels in the case of the numerators as well as the denominator currencies. So when compared to last month level, these levels are higher. So it shows very clearly they are doing the middle level consolidation with either way stop and then start gaining the levels to that of the higher level consolidation zone. So that is what shift in trading zone is expected to happen after this particular referendum. So the referendum might be important for the traders, but the players are waiting for the referendum because the traders need to commit more positions, and afterwards they will make one extended downward stop and start gaining the levels. So Friday they are expected to gain the levels, and next week you come across the new this month, June gets over and the new month starts. They are expected to make a very big volatile moves in that in order to handle the derivative market, the options and the futures. They are expected to make a big drop and a big gain during that particular time frame. So keep in mind that just because the fundamental is positive, it doesn't mean that market has to continuously gain. It will make whipsaw moves and is part of the game. And the traders continue to get the uncertainty, and the uncertainty creates a market fear, and the surprise creates a market fear, and the surprise induces the traders to do wrong trades. Then the players continue to earn money. And that is what happens in the market every time, and you have to follow it carefully. In the case of yen, 104.42 is the low, but here it shows wrongly yesterday's low on the high, but the initial low 104.42 and 104.96, and the market has not breached. And in the case of CHF, 95.62 is the low and 96.02 is the high. They are not breached it. So only in the case of euro, they made a brief upward stop and come down. And in the case of Canadian dollar, 1.2793, they just breached and came down to 1.2782 and holding below that. And the high is 1.2845, that is not breached. And so they are likely to come down in the case of USD CAD. And in the case of Australian dollar, 74.96 is the low and 75, it is 75.28 is the high, but they went up to 75.47 and holding there. So in the case of commodity pairs, already they started the USD gaining move. Sorry, the correction. So they are expected to make the upward move slowly in this particular session. We will come to that of the spike trade call. So they are expected to swing and rise. In the case of Euro and GBP, that means they are expected to slowly gain the level. They have made a brief upward stop in the case of Euro, but come down, but not gone to that of the low. But during that of the US session, they are expected to trade around that of the low. And similarly in the case of GBP also, because the forecast says. And also we are seeing that they are only making the wide range swings between the high and the low in most of the currencies. And in the case of commodity pairs, they are just breached the low in the case of USD CAD, breached the high in the case of Australian dollar, indicating that they intend to make the USD gaining move, USD weakening move in this particular session. Afterwards, they are expected to make the USD gaining move during that of the US session. So now how exactly we should take our trade call? Because see here, it is not the question of spike to happen immediately. See, normally I give the spike trade calls before that of the data release, and after about 1 or 2 hours, I come out with that of the post data release and show you what was derived earlier as come true during that of the later session. If not come true, then how exactly I use the hedging to limit the risk and maximize the profit. So if the market move in tandem with that of the forecast and expectations, then we trade accordingly with the help of the trailing stop and the trailing take profit order. But in the event if the market goes against, we use the hedging to limit the risk and do either way trading if needed. So that is how we use the trading strategy also to earn money from that other market. Now, since it is going to be a trade, we take the position today and see the outcome tomorrow. In such a situation, we should be able to buy when they are making a brief downward stop point. When they are making a brief downward stop point, we try to take a buy, then we will be in a position to really make a profit. Still, we will keep the hedge order to limit the risk. So these are all the levels recommended, and we can do it in a demo trading platform and just place the orders and see the outcome of it. And tomorrow I'll come back by 8 GMT again and review the calls and show you what happened. And in the event if it is hedged, how I handle the hedging, so that you will be able to really understand that we limit the risk. Market means risk. We have to take the risk. As soon as you take a buy position or a sell position, it will show loss. It is inevitable. But how we are able to convert that into a profit-making proposition is vital. No? Ultimately, for that, irrespective of the forecast, the trading strategy plays a vital role for anybody to make money from that other market, so that you will be able to get rid of the market fear. And then when I want to explain about the trading strategy using the hedging, we have to always keep in mind in the market there are two types of traders. One who is doing the buy and sell trade, another one doing the sell and buy trade. So if we use the hedge, we act as a buy and sell trader on one side and act as a sell and buy trader on the other side. So when both the traders are in you, you can individually decide on each of the trade and book profit. So it gives a very objective approach to that of the market when you hold both the positions. Some people might really get upset when the position is hedged and they think that, okay, the position is hedged, so what do I do with that of the hedge or the original position? They are not in a position to plan. Then they think that hedging is useless. But if they know that in the market, always there will be a seller as well as a buyer, and how the buyer is going to think when the market goes against him, how the seller is going to think when the market goes against. If you think in both the directions, then you will be able to really develop more and more of trading strategies. So the trading strategies are many, and I will not be able to disclose all, but What you can do is, if the position is hedged and the hedging is not making profit for 30 minutes, we understand that the players have done a brief downward stop, and at that time the position got hedged, and then subsequently the market is showing loss in the hedge for 30 minutes. Then close the hedge with 1 or 2 pips loss, or we stop at entry and keep another hedge order 20 pips or 30 pips below and limit the risk. And once they start gaining the level, you find that you will be able to keep stop at entry in our buy position. Then the hedging is removed, hedge order is removed. Then you will be able to trail a stop in a profit making position and trail the take profit order. When the market comes closer to that, you take it away and maximize the profit. So a single trade, we should be able to earn as much as possible from that other market. That should be the objective of any trader, rather than doing scalping of 5 pips, 10 pips and things like that, and making our mind so stressful. We have to calmly take one position and maximize the profit in that, give a gap of 30 minutes and wait for the next sessions to start and take another position. If we do it like that, it'll be a joyful situation for the traders. So here the levels are given, and if you've got any question, you can ask me. I'll be willing to answer those questions. Okay. Then how about New Zealand dollar? New Zealand dollar is also expected to gain the levels, and so I'm not giving any uncertain reply in the event if it is negative or in the event if it is positive, and I'm explaining to you based on my forecast that the event is going to be positive for GBP. As a result, the market is expected to go up. If I remember, in 2001, on September 11th, I gave the forecast in FX Street that US dollar will be under severe pressure. And it was around 12:30 GMT, I posted it. And you know what happened afterwards. I'm not trying to project it that way. I'm just telling you the forecast is reliable, nothing more than that. How is the USDN movement today and tomorrow? USDN is expected to make an upward move, and any dip is a buy opportunity. They are expected to come down to 104.16 or 20 and then start gaining the level. And if you do the market analysis now, comparing to that of the initial lows and the highs, what they have done it, you find that they are making the contrarian move. Contrarian move, they do it in order to handle the crosses. That is, Euro and GBP are showing positive net change. That shows they are making USD weakening move. Whereas USD Yen is showing positive net change, it is showing USD gaining move because Yen is in the denominator position of the USD Yen ratio. Euro and GBP are in the numerator of the ratio. Yen and CHF are in the denominator ratio of the ratio USD CHF USD Yen. So when it shows positive net change, that means Yen is weakening against US dollar. And now CHF is strengthening against US dollar when it is negative. So when Euro, GBP and USD Yen are showing positive net change, that means the Yen crosses the players want to gain levels. Euro Yen and GBP Yen, they will gain the levels by that process. And you know very well how they have beaten out the Yen crosses the week before. And from there, they after consolidation, they started gaining the levels. So that way, they are doing it. And if you look into that of the Yen crosses, you can see that they are in positive net change. See, Euro Yen and GBP Yen both are in positive net change. They will continuously gain the levels in the case of Yen crosses during this particular process. And especially those who take positions in the case of crosses need to keep in mind that they make the one-sided move for a prolonged period in those crosses. So if you are caught on the wrong side, then it might take several days for you, even if you use the hedging, to exit out of the positions. So if you use hedging and do either way trades, you only limit it to that of Euro and GBP, not in other crosses or not in other majors. Tomorrow also USDN is expected to gain the level. Initially they will just make a downward move in the case of USDN in order to give the trigger for Euro and GBP to go up, and later on they are expected to gain the levels in the USDN also. Okay. Is there any upward move in GBP before going down? Will they close the gap in GBP? Okay. Now this is what most of the people ask. Will they be closing the gap? See, especially the gap forms, first of all, keep it in mind, the gap forms only there is a shift in trading zone. Only when they make an upward shift or a downward shift in the trading zone, the gap is being formed. So they trade in a particular range and then quickly gain the level and go to the highest level and do the middle level consolidation. And the gap, they don't fill it. And after making further higher level rise and make frequent upward stoppment. Now, if you watch carefully, after that a prolonged lower level consolidation with frequent downward stoppment, they have taken the market to that of the middle level and have done the either way stoppment. Sometimes you find a quick rise upward stoppment and come down, and a quick downward extended stoppment. Afterwards, they gained the levels. The case of GBP, I was telling you that how exactly they came down to that level of 1.40, and from there they started gaining the level. That was that extended downward stoppment to make a continuous gain to that of the middle level and reach the highest level of the middle level and go to that of the higher level consolidation zone without filling the gap. No, they are expected to go further higher to that of 1.5455 level and do the higher level consolidation with frequent upward stoppment, and then start dropping it afterwards in the month of September, October. So till such time, the gap will not be filled, and they will fill the gap only after that. At that time, you might find the market has filled the gap and you will try to take a buy, but they will come down in the market level, breach the middle level consolidation, go to the lower level consolidation. And you always see that in the market, they take a prolonged period to rise the market, but the drop happens in a few weeks. And even the multi-year trend reversal, the drop they've finished in a matter of 2 months. Normally, in a normal trend reversals, monthly trend reversals, they just drop it in a matter of about 2 weeks and come down about 1,500 pips in one go, straight away, create the market fear, and any level you buy, they will drop. And why they do that? In order to drop the market to the lowest level, and when all the traders think that there is no point in holding buy position and liquidate all the long in a distress condition at the lowest level, the players buy all those things. No, that is how they are able to buy at the lowest level, creating the fear in the market, and book profit at the highest level when the euphoric buy happens from that of the traders on the highest level. Without any fear, item of fear, the trader will buy after a phenomenal rise in the market and they will become bullish. But the players book profit with such bullish people. That is why I always say that don't use the word bullish or bearish, and that will change your mindset and you get trapped with that of the market sentiment. And then subsequently, when the players make a move against your sentiment, you find it extremely difficult to accept it. Awesome. Is there any upward move in GBP before going down? They could make a brief upward stoppment during the late European session and then start coming down. So the players are here to trap the short sellers now. Once the short sellers do the short covering, then the short sellers turn long at the higher level. The players are here to drop the market and induce them to liquidate the long positions before taking the market to the higher level. Always keep in mind that players are interested in profit making, not simply showing the levels. If there are any questions, I am willing to answer those questions. Then I will show you the forecast for tomorrow. Those who have been following my forecast on Mondays, I'll just review it tomorrow anyhow. Tomorrow, Friday, I'll review the forecast, what I've given it on Monday, to show how exactly they are expected to make move. And today they are expected to make the slide. And tomorrow they are expected to make a very big rise in the market. So that we'll be able to see it. Is there any other question? I don't want to talk much about the referendum part of it technically, because ultimately as traders, we are more interested in to know whether we can do buy and sell trade or a sell and buy trade, nothing more than that. Also, it is very important for us how exactly the trading strategy has to be, because ultimately, the trading strategy is going to give consistent profit for that of the traders. And I was telling you in the beginning of the month, one can do the position trade. If you take 1.4075 or buy and hold it, they came down up to 1.4013 and then started gaining the level. And so far they gained about 700 or 800 pips. And you know that monthly limitation in the case of GBP is 2,300 pips and 1,600 pips in the case of Euro. So they can make such moves in the market. So we need to understand, in a position trade, we can really maximize the profit, or we can do several swing trades and make money. And also we need to understand the limitations of the players. And other day when they made the gain of about 250 and 300 pips day for yesterday, in Monday, in the case of GBP, straight away they gained about 250, went up to 350 and came down all the way during the US session. And that is how they do the moves in the market in order to make the shift in trading zone. So we have to identify the type of moves the players do and then try to track them. You will find trading becomes a child's play. Okay. Shall we put the pending orders? Yes, you can put the pending orders, or wait for the market to come closer to that, around that level, because they are all mathematically derived levels. There can be a slight variations from that of the actual market conditions. When the market comes closer to that, you can just keep the orders. Like the case of GBP 1.4675, I kept it. Probably you will be able to buy it at 1.4667 or 78. So we have to just find out around that level and do it. Similarly, in the case of Euro, I just gave the buy limit order 1.1312. We can come down below that of 1.13 also if there are plenty of stops. To hit the stops to 1.1296 or 90, you can buy there also. So when the market comes close to these levels, you watch and then try to take the position. You will be really find that the hedging will also be not hit. Keep the hedge order quite away, about 40 to 50 pips during that of the spike time, so that you don't get hedged. And once they hedge you and reverse it, probably the hedging will make big loss. So you have to handle it carefully. So wait for the quick moves in the market when the market comes closer to that, and then try to enter into the market. You'll find it is really an opportunity trading. Is there any other question? Now, my spike trade call for this UK EU referendum situation is that there is going to be a positive outcome in this. In line with that, the players are expected to gain the levels today during that of the European session and then start making the slide during that of the US session. So one can take a buy, but sell and buy I may not recommend, because you should be able to carefully exit out of the position. If you fail to exit, that sell will make loss. Even though it might be the highest level sell, the sell will be making loss. And one need to understand that many traders, when the going is good, they simply watch and laugh and enjoy. Okay, I am in the money. And suddenly when the market reverses and go, they become sorry. And they say that I should have closed the position with a profit, repent for the trade. Don't do such type of emotional expressions. That is of no use. So you have to, once a position makes profit, you have to keep stop at entry and trail the stop. And that way you can do sell and buy trade. But as a normal emotional trader, wait for the market to come down and then take the buy position. Then you will be able to really profit easily. And that way you will be able to avoid the stress. Because the most important thing for the trader is to get rid of the stress and not to become tensed during that of the trading time. Once you become tensed during that of the trading time, invariably your BP goes. Whatever the money you earn from that other market, you may have to spend in the hospital. But don't do that. Instead, you try to earn money in order to improve your lifestyle. So for that, easy way of trading is trade only one currency at a given time. After booking profit, think of another currency or think of another trade. Also, take only 1% of your equity for position taking and keep the hedge order to limit the risk. And once the position makes profit, keep stop at entry and remove the hedge order so that you eliminate the risk. And this way you will be able to find that you limit the risk and maximize the profit. So I take this opportunity to thank FX Street for the facilities provided to present the webinar. And I'll come back tomorrow by GMT and show you the result or the outcome. You can also see today how exactly they gain levels during European and drop again during the US session. So then you will be able to understand players are here to make the swings and the fundamentals may come and go, but the players are going to bring in the volatility in the market forever, like a sea. That is what we need to understand. So every time they will come out with a new story, or there might be economic or technical stories, and they are all stories for the traders to believe or traders to get convinced and take positions. If somebody says that market is going to be bearish, 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 everybody started telling bearish, then the trader feel like taking a sell position. Then later on when the market goes up, then the person was telling bearish, yeah, it was bearish at that time and subsequently it turned. Or you should have traded with a stop. And that was recommended. So invariably it is very easy to give the call, but if the call goes wrong, how exactly we handle it is important. That is why I have emphasized on that of the trading strategy, so that you need not depend on anybody. What do I do with the position? You will be able to earn on your own irrespective of the market moves. So focus on the trading strategy, then you will be able to really consistently earn money from that of the market. Thank you one and all. See you tomorrow during that of the Asian session live market analysis and also during that of the outcome of the referendum. Wish you all happy trading.